it's me again, and I'm using this particular software, so this has to be done in one shot. I can't like stop and start. This video is Mmtlp, frequently asked questions. So if you have somebody you're trying to explain what Mmtlp is or any of the finer points, you can use this video. I will be explaining P is answering the most frequently asked questions. These are general questions that we seem to get pretty often. First one, what exactly is Mmtlp? Well, Mmtlp is a special dividend play. The special dividend comes from the merger of two companies. It was really a reverse takeover. It was Metamaterials from the Canadian side, which is a metamaterials company, and then Torchlight Energy, which was an oil and gas exploration company. COVID hit. Torchlight wanted to end their NASDAQ listing and go into other things with the clause of selling the oil and gas assets when they were able to, when the market was better. Metamaterials agreed to these terms, and thus they began the process. We're at a point now where the oil and gas is quite significant in value, and they're getting ready to sell this property. How much oil and gas is there? Well, we know there's at least 3.2 billion barrels of oil. That sounds like a lot, doesn't it? The original geology report stated 2.3 billion to 5.1 billion barrels of oil equivalent. That's oil plus gas. The third-party independent petrophysics report done by Stimulation Petrophysics out of Colorado confirmed that amount. There's the company NextBridge, which is also Hudspeth operating, and they have determined 3.2 billion barrels of oil. Not oil gas equivalents, but oil. So the gas could be, you know, a couple billion barrels of oil equivalent of gas. By the way, 1 barrel oil equivalent for gas is 6,000 cubic feet or 6,600 cubic feet. So that's quite a bit of gas. What will that dividend be? Well, Torchlight gets 66.5% of the sale, assuming that the royalty holders don't want to sell. There's 25% royalty, 20% goes to university lands, 4.5% goes to Greg McCabe, and then 0.5% goes to various other interests. If you calculate either by everybody sells and the buying company gets 100% mineral rights, or the buying company gets 75% mineral rights, it works out to be the same for us. I've done a couple of videos where I use both calculations. They're within a few dollars of each other. So as far as we're concerned, it's about the same. Well, how much is it, right? $29 to $46 to be conservative. That does sound like a lot, but we are talking about 3.2 billion barrels of oil here. This is one of the largest onshore domestic oil discoveries in quite some time. So it's 3.2 billion barrels of oil plus gas. My 29 to 46 conservatively does not include the gas, to be conservative. If it's over $46, I won't complain. I see it going to 60 on the upside, but to be conservative, $29 to $46. You want to know, when will the dividend pay? I expect sale to happen sometime in late Q3 going into early Q4. I do have a timeline here, and I will talk about the timeline. The main spin out, I'm thinking, is going to happen by June. We do have a timeline of steps, with the sale going late Q3 to early Q4. It's going to happen in a few parts, how you're going to get paid the dividend. If you get Mmtlp now, it's going to go into an Oilco share as part of the spinoff. The shares will then be reconciled, and you will be given an Oilco share, which are going to be registered, which is why we have an S1 filing. Until there's a sale. Hooray! How will the sale happen? It can happen with cash or stock in the buying company. If it's all stock, that's great, because that's not tax. There's no corporate tax that translates to that higher dividend price for you. If it's all cash, then that's 21% of corporate tax. This is why stocks are preferred, because you're not taxed on holding a new stock in a new company. If you get a stock in exchange for your Oilco share, and we know what the value of those shares are to be, I've calculated $29 to $46. I have quite the calculation videos out there. A share in the buying company like ConocoPhillips, Exxon, Marathon, you would get shares in those companies. You would not be taxed on those shares until you sold. The bonus point is if you hold those shares, you get quarterly dividends. In the case of ConocoPhillips, you get quarterly plus dynamic dividends. You get up to 8 dividends a year, which is kind of nice. Is there a timeline for this? There is. So I'm looking for Spinout into Oilco by June. That means that's your timeline to get Mmtlp, is by June before it goes bye-bye into Oilco. Which, so far as I know, at first it should be a private company. If I hear elsewise, I will update you. I will change my timelines. I will change hypothesis based on information, what I have. Sometimes information changes, and so things have to change. I'm fine with that. Other things I stand firmly by. So let's look at that timeline. Right now we're in step 1, the audit process. After the audit is finished, then the SEC says, okay, yes, we accept this audit, and then they're going to head and file the S1. We might not hear about steps 1 or 2. It might just go into step 3. If we see the S1 being filed, then we know step 1 and 2 is completed. That's how we're looking at it. If we see PR before, then great. But if you don't see any PR until the S1 comes around, assume step 1 and 2 have been completed. After the S1 is filed, we get the spin out to Oilco, in which point Mmtlp goes into Oilco, and it will stop trading. So you can play this on 2 parts. You can do the actual dividend holdout for the sale, or maybe you want to play the whole run up for Mmtlp to go into Oilco. There's 2 ways you can play this. It's your money, your choice. After the spin out into Oilco, we're going to initiate the 2022 drilling plan. What is the 2022 drilling plan? According to the 2020 Torchlight 10K, it includes 5 new vertical wells. There's also a good chance that lateral wells, 4 new lateral wells could be done on the 4 wells completed in November and December of 2021. There is currently a permit filed to do 1 lateral well on one of those new vertical wells. Lateral, by the way, means horizontal. So you first go in vertically and then horizontally. 1 vertical well can have multiple play. You can have multiple pay zones. Sometimes wells will go this way and this way. I have a couple different videos where I explain the different wells. After there's some drilling and more proving and data on that property, then we're going to see a sale. It's a lot of oil you're talking about, and thus it's going to be a high sale price. With that highest sale price, you would expect that people want to see this property in action. What can this do? What is this property capable of? They want to see a test run, right? Before they plunker down that much money to facilitate a $30 to $50 dividend. What are the risks? If you're playing this solely for the dividend sale part, the risks are it could take a bit longer than Q4. If you're playing this for the run-up part into Oilco, there's a chance there won't be a run-up. And there's a chance you'll be stuck waiting around for the dividend to sell. If you don't want to, if nothing runs up. Those are the risks, but really that's a risk of any stock. I like to go into stocks with the assumption that they could all go to 0. A lot of people will tell you, don't invest what you can't afford to lose. I go into stocks with the mentality that risk is 100%. Again, that's the same philosophy like, oh, expect to lose this money. But again, you got to decide how you want to play it. Or maybe you're going to do an if and then statement. Let's say, if Mmtlp runs up past a certain point, then you're going to sell. Great. If not, you'll just hold. Perfect, right? Have a plan, have a contingency. My whole channel up until this point has been going through the possible scenarios for a sale and the possible deals that could be struck and the ways that they could be structured. Because then we have a contingency plan and we can just call back on that video and I can just touch back upon that video, which I did. So I like to have contingencies going into things. As much of a risk taker I am, and as spontaneous as I seem to be, I try to have a contingency for a lot of things. Well, is there any infrastructure on the property now, or is it just bare land? There is some infrastructure on the property now. There is a gas pipeline owned by Kinder Morgan that runs to El Paso, and that goes on the property, and it is available to be hooked up, actually. The Kinder Morgan gas pipeline, it's on the property now. There is also an aquifer that's under the property, which saves money in terms of drilling. If you're drilling, no matter what you're drilling, you're going to need water. That's how you make your drilling mud. These motors run on, these are mud motors. They need the drilling mud to facilitate the drilling. That's how they work. Also, when you frack, you're going to need some water too. And this water has been approved for all that use. It's, you know, good quality water, and it's this nice aquifer that's under the property. I've talked about it before. The video that I talked about this aquifer was called The Secrets of the Oro Grande. In addition, there's the other wells on the property. So far, including last year, there's 10 producer wells. They're mostly all shut-in producers right now. They do have some flowback tests that were done on them, but they're mostly all shut-in producers, just waiting for that buyer to come along. You're probably saying to yourself, well, gee, bird lady, if the dividend is $29 to $46, why aren't tons of people buying this? Currently, at today's date, which is April 25th, there still hasn't been a lot of PR released. I think once we see more PR release, more people will start to be buying this. This is part of that risk to reward assessment, which you must decide. Is the risk worth the reward in this case? I get this question all the time. Mmtlp is also trading on the OTC, which not many people have access to. You want to think about institutions. Well, how many institutions can buy on the OTC? Also, I'll cite John Berta, how he talked about how Streetwise and BlackRock have Meta on their books. And it's not because that they want to, but because it's part of some ETF or some sort of mutual fund that this gets involved in, and then they have to have it. So just because an institution invests in something doesn't mean it actively wants to invest. It's just part of an ETF, like the Russell 3000 index. It's part of an ETF or some sort of fund in which it kind of got lumped in there. In this case, that isn't too common for OTC stocks, for OTCs to get lumped into ETFs. As a result, you're not going to see too many institutions buying them. I'd like to point that out. With that being said, and the limited amount of buying, not everybody overseas has access to OTC. And even some US platforms like Vanguard are just doing away with their whole entire OTC market. They'll keep the shares, and you can sell them, you just can't buy more. And starting on April 28th, I hear Vanguard will limit the OTCs. E-Trade has limited theirs in terms of pink sheets. They don't do as many, and you have to put in limit orders for anything. There's no more buy it market. It's all limit orders. It's crazy. Some places like JP Morgan have allowed the trading of Mmtlp, and they don't do OTC. So it's kind of interesting. It depends on a per broker basis. Why is it on the OTC? Well, at first, the Series A preferred share, which is what it was called before it became Mmtlp, was just sitting there. It was a placeholder for the dividend to arrive, and it was just sitting there in people's accounts. When that placeholder filing happened, the SEC filing to get the placeholder in, as me and GG76 on StockTwits read, we were looking through this. We didn't find anything callable, but there was one word in that filing which allowed for the trading of Mmtlp, and that was the word transferable. Because the term transferable was used in the filing, It was then allowed to be brought onto the OTC, as talked about by John Berta, who was the former Torchlight CEO, and he does have more of the NASDAQ experience. He has more experience with these types of scenarios. But that's how it ended up on the OTC. Originally, it was supposed to sit there in your account until spinout or sale. But as a result, it began trading because of that one word, transferable, and two market makers got together. Either somebody wanted the shares because they had a liability to cover, or somebody didn't want their shares. But a market was created, and they were able to get a ticker symbol and file with it because the word transferable was used in that filing with the SEC. And finally, I get asked this quite a bit. Why do I wear funny bird costumes? One, I find funny costumes fun. And who says you can't have fun in the market? Two, this channel, I try and do my best to bring forth like investigations. I like to do investigations. I snoop around. I ask questions. And as I state, like, sometimes I'll change things depending on the information that I find. If I get new information that kind of changes things around, I'll adjust and let people know. But aside from that, really it all boils down to this is entertainment and not financial advice. So I wear an entertaining costume. Are you not entertained by this? Also, I find these costumes fun, and who says you can't have fun in the market? I was also told I should wear a suit. But it's not financial advice. But wear a suit to look credible. Okay, this kind of satisfies all those arguments. It's a suit. It's entertaining. And it's fun, and I'm a fun person. I like to have fun. I like to ask a lot of questions, and I snoop around, and I tend to question a lot of authority. But I like to have fun, too. So that's why I wear the bird costumes. Also, it's a good brand recognition. It wound up like being a brand for me. With the whole bird thing. That's what I had, and I decided to go for it, like take a Richard Simmons approach, and it wound up like being really good brand recognition. So I'm running with it. It worked. I'm running. Okay, guys, that's it for today. That's my summary of MMTLP, and I hope it answered some questions. I think real gem here is the amount of hydrocarbons that's within this play. Is the hydrocarbons. And as time goes on, and especially as we, S1 time, I think we're going to see a lot more PR come about. I've talked about this in other videos. The reason why we haven't seen a lot of PR is because the company that controls the PR itself right now, which is Metamaterials, they're not an oil company, but they have PR control of this for right now until that S1 happens, until that spinout happens. Once the spinout occurs, then I think a lot of PR will be able to be released. In the meantime, Metamaterials is under lawyer lockdown. And I've talked about that in a previous video yesterday about the lawyer lockdown. All right, guys, I will see you soon. Goodbye.